We want to release a press release because of the ongoing situation in the country. So I prepared a press release, and I will just read it through. The Monetary Policy Committee of the Bank of South Sudan, which is chaired by myself, the Governor of the Bank of South Sudan, held an ordinary meeting on Thursday, which is today, March 23rd, 2023 at 10 a.m. The meeting reviewed the monetary policy instrument in light of the current situation and got updates on recent macroeconomic developments, with focus on foreign exchange market, inflation, as well as condition of the monetary system. The meeting noted with concern the persistent depreciation of the South Sudanese pound against the US dollar and the subsequent increase in prices of imported commodities, and hence raising inflation, attributing it to the tight global and domestic financial conditions. The global financial conditions remain tight following the Russia-Ukraine war, Federal Reserve tightening of its monetary policy, and banking crisis in the US, where 2 banks failed. The US dollar strengthened sharply against major currencies, including the regional ones, including the South Sudanese pound. In addition, the increase in prices of imported commodities elsewhere and major trading partners like Uganda, whose prices rose by more than 50% in the month of January, have a strong bearing on the food prices in the market in Juba. This is according to the Permanent Secretary, Ministry of Finance and Economic Planning. Domestically, the financial condition, and in particular the exchange rate, remains volatile. The demand for dollars for imports from the rest of the world, school fees, and Easter season exerted upward pressure on the exchange rate market. It is also observed that major institutional units, business entities, and households buy dollars for precautionary measures to caution themselves against currency depreciation and inflation. Analysis of the commercial banks returns reveal that 77% of deposits are denominated in US dollars. With respect to monetary system conditions, the banking sector is largely safe and sound and remain resilient. The level of international reserve for the central bank is below the 4.5 months of import cover, a threshold required by the East African Community conversion criteria. The recent IMF food shock window, the Treasury single currency account, and proceeds from the oil reserve will definitely boost the reserve that required. Despite the exchange rate volatility, headline inflation remains elevated, but at a double digits of 14% and 13% in the months of January and February 2023, which is close to the policy rate target of plus or minus 8%. The private sector credit growth was gradually picking up, with total amount of loans in December recorded an average of about 43 billion compared to 22 billion in 2021. Supported by increased GDP growth rate, is projected to average 3% in 2023, driven mainly by oil and service sector and government consumption and investment in physical infrastructure projects. The measures taken to contain the currency depreciation and inflationary pressure, the fiscal and monetary authorities, that is the Ministry of Finance and the Central Bank, are working in close collaboration and are committed to implement the public finance management reforms aimed at restoring macroeconomic stability. Specifically, the Bank of South Sudan and the Ministry of Finance are collaborating on operationalization of the Treasury single account, which allowed the central bank to automatically convert all US dollars denominated government revenues into SSP. This will allow the bank to build much needed reserve, international reserve. In addition, the international reserve position of the country has been boosted by the $115 million that the IMF board approved as the food shock window. That money we have it. In addition to that, the bank also is taking additional measures in tightening the monetary policy by controlling the growth of broad money. In effect, the MPC unanimously resolved that these are the points that the Monetary Policy Committee agreed, that to maintain the zero deficit financing, which means no overdraft. Secondly, increase the amount of term deposit. We are currently auctioning term deposit to commercial banks. We're going to increase it from 10 billion to 20 billion. Maintain growth in broad money of 11 plus or minus 11% and headline inflation of 8% respectively. The Bank of South Sudan is going to lift restriction on the frequency of deposit by commercial banks. So, which means commercial bank will be depositing money anytime and every time so that they do not complain that they're given only a day or two. Third, the central bank will increase the interest rate by 300 basis points from 12% to 15%. By this, will encourage commercial banks and even those who have money outside to come and invest in the term deposits that the central bank is offering. 6, introduce the immediate effect cash-based auction whose proceeds will be paid in cash rather than debiting book value. What we are doing here is that the normal auction is that banks instruct us to debit their account. But in order for us to get money from the people on the street, we are introducing now that all auctions be paid in cash. If you have SSP, you bring the SSP either to a bank or Forex to come and to come and bid in the auction. But we are going to provide the auction amount immediately. 7, maintain average foreign exchange exposure limit of commercial banks by plus or minus 10% of car capital. 8, maintain original target to build international reserve of 4.5 months of import cover. 9, the bank to provide trade finance facility to major importers of strategic commodities such as fuel, food, and pharmaceuticals. 10, the bank to continue intervention by auctioning $5 million every week to commercial banks and to Forex bureaus and will increase the amount when necessary. 11, and finally, the bank will continue to monitor and review the situation and respond with appropriate measures as the situation warrants. Yeah, the questions that Manyon raised was why are the reforms not yielding results? Thank you very much. This is a very important question. Reforms do yield results, but it takes time for it to yield results. You cannot expect, the reforms we put in place, even if you take like the public finance management, that is a means of reforming the whole economy. But it's not in one day. We continue meeting to come out, to iron out issues that are available so that can be reformed. The reform takes time, but it's yielding results because we notice that the reforms even we put in the bank, like closing all the government accounts denominated in USD, this was done. There are issues now, we are opening some of the accounts because these are for collecting PIT money, but we say this one will only collect but no withdrawal. Whenever you collect the PIT, you give it to central bank and we give you the SSP equivalent. These are the reforms that we are undertaking. There are other reforms that we are also doing in reforming like the financial sector. Some of the banks are not properly capitalized. They do not have enough capital to enable them or, perform their duty of, of taking money from here and lending to here. Some banks don't do that. We are working with WFP, with World Bank, to ensure that we put these reforms in place so that the banks play their role of intermediation. These are the reforms that are going on. Second question was about the dollar going up. I think if you read in my press release, you will notice that if you have been to the neighboring countries, you will also see the problem going there. Take, for example, Kenya. The dollar is almost 145 shillings to a dollar. This is not something but there's no dollar even in the market. So the whole issue of dollar going up is due to so many factors. The first is America also is trying to mitigate the inflation that they have there. What did they do? They used to have an interest rate of 0.0%, now it's 4.5%. And that one has an effect on all the countries dealing in dollars. The collapse of some banks in the US sent panic to all the financial financial sectors worldwide. So the dollar, this is from the American part. And then you take the war of Ukraine and Russia. Ukraine is a country that was feeding the whole world. Ukraine and Russia was feeding with wheat especially. All the countries are suffering because of the war. This in itself also, the price of dollar, and some of them now are not using dollars to sell their wheat. That's why the dollar is going. The price of commodities that are imported, and we are a landlocked country, we import everything from outside. So any increase outside, they affect us also here. And we use dollars to import things. That's the reason why, these are the major reasons why the dollar is going up. We don't produce. Our main export is oil. But whatever we get in oil, we also use it to buy things from outside. The price is outside. Even the fuel we buy from outside. Before it used to be bought 0 point something a barrel, but now it's 1 point something, a liter, from outside if we're importing refined fuel. So this is the reason why the dollar is going up, It's worldwide, it's not here only. It's not only limited to South Sudan. I just came from Ethiopia. I used to know that the exchange rate in Ethiopia is strict and all this, but now the black market and the parallel market and the bank rate are totally different, double. You change $100, in the black market is 10,000 birr, in the bank is 5,000. And people are also saying they are facing the same thing. Question number two was from, you're called Bidal or Bida? Bida. Huh? There was, because of the increase in the oil production and, the GDP growth is estimated to be 3%. Some, like the African Development Bank is anticipating 4% for South Sudan, which is really better compared to other countries. This is because you take the increase in the oil prices, and also there are possibilities of increasing the production of oil. So this all, work towards increasing the GDP, targeting that GDP there. The speculation, we know speculation, most of our market is actually speculative. I think you go outside here, somebody can determine tomorrow the rate is going to be so. But also, we have to be careful in dealing with this kind of people. I know they are speculators. So what we need to do is to put some measures in place to ensure that we target them. Now, we know that the government is paying salaries on time. We have to ensure that we have that equivalent to ensure that we bring that money back. And people are holding money. If you go to the street, you see people holding brand new as if they are just producing money from there. But this is the results of the, domestic borrowing that happened before, and then now the salary continued payment of salaries on time, and this money finds its way in the market. But what we are doing is that for us to target that money, we are going to auction money. But in auction, you have to come with your money. Don't tell me go to my account and withdraw. Bring the money that you have and you take the dollars. This is one of the measures we are putting, and we expect that with that, we will be able to mop out a lot of money from the market, because what we are doing now is just a book value. The bank applies and just say debit my account. The money is there in the account, and with debit, it doesn't have any impact. So this is now what we are trying to do, that you have your pounds, bring it, we give you the dollars, but you have to go through a bank or through the Forex. And one of the reasons why we are lifting we are allowing now banks to deposit at any time is that, because we expect that money will be coming a lot. And before we used to give them that every commercial bank has a day to deposit. But now we allow them to deposit at any time. This is in anticipation that the money that will come in, as a result of this kind of auction, will allow the banks to bring the money, banks or forexes. We are also encouraging commercial banks to approach people with money. Term deposit, when we increase the central bank rate from 12 to 13, commercial banks are going to come asking for term deposit of maybe 10 billion, 5 billion, 3 billion. They will get interest or agreed rate between up to about 15% that we have raised. But now, they are the one benefiting. We also want them to use the money of their clients. Let their clients benefit. Let their clients apply that we want term deposit from central bank, not only commercial bank. Besides, they are using the money of clients to come and use that, because they are getting profit on the people's money. So we want also them to encourage them to get money from their clients, so that the clients, like in any other country, when you want to apply for treasury, for the government bonds, for example, you go to your commercial bank, you say, I have money, I want to invest in this bond market. And they will do it for you. But now what is happening here with regards to term deposit is that commercial banks apply on their own. They don't want to share the profit with anybody. And we're also telling them that since you're investing in this, we want to ensure that you also pay interest on savings accounts that's there. And we're going to take that with commercial banks. Joe from Al Jazeera asked for average inflation. Inflation in South, we rely on statistics from the National Bureau of Statistics. But as of January, inflation was reported to be about 14%. So February, that's as of February. So we have not gotten any new report yet of that, which is not bad. It used to be like, 100 something, but now it's coming down. At some point, it was even 8% as required by the East African community for the convergence criteria, that each country should maintain an inflation rate of 8 plus or minus 8%. How much reserve is available? As you will read in this document, that on the implementation of us working with the Ministry of Finance together, any money that comes from non-oil revenue in USD, we convert it immediately and give it to Ministry of Finance in pounds. Any oil money that comes, we convert it into SSP and give the money to finance. Only items that need to be imported from outside, like machinery for roads and all this, these are the ones that we use dollars to bring them. But the agreement, the meaning of the Treasury single account is that the government has one account, and it's going to be in SSP only. Any dollar that comes into the country has to be converted, and the money is put there. And then Ministry of Finance will now know how to divide it according to the matrix they have. So this is what we are having. And there is already an increase in the non-oil revenue collection, especially in USD, both in USD and SSP. And if you hear the NRA saying that we are going to collect in much of this amount, they talk of it in SSP. But there is the dollars we converted, and that is the total amount because they use the rate that's available there to convert the amount and give it to. So that is, we have really started collecting enough reserve because of all this. Like, when the oil money comes, there is a matrix that is divided. Oil producing areas also get a percentage. All those percentages now, according to the states, we give them in SSP, we don't give them in dollars. So that in itself is already we are building reserve. Plus now the food shock window that came has really boosted our economy. But say the global trend is the one really affecting what is going on in the market at the moment. Dennis from, you asked whether there are still some government institutions using dollars?
There are government institutions using dollars, yes.
In what sense? For us, what we did was that we issued a circular closing all the government accounts in dollars, and we did that. Now, and we said South Sudanese pound is the national currency. Any contract signed should also be done in SSP like any other country. But of course, when you now want to bring equipment from outside, it's now when you come to the bank and I request that I want this to be done, not everything, because now we are trying to encourage. Otherwise, there will be no need for us to print SSP if we are going to use dollars in the economy. That's why we have closed all the government accounts and tell them that any dealing, even if you see the budget, the government is reading the budget, it's all in SSP, there's nothing in dollars. So we're just following the same trend that no government institution should use dollars, only those which are, for example, their projects funded by international communities. And they want their accounts, although it's under a specific ministry, but it should be in dollars. This is for accountability purpose, and we are doing that. So those accounts are the ones which are exempted, that are funded by donors, but not any other account that any ministry or any state is using. All those have been converted now into SSP. So we have closed all the accounts. Those who do not have SSP account, we have opened for them SSP accounts. The issue of 18% charge by commercial bank, I saw the circular issued by NRA, but I was surprised because we have not been consulted on that. But we want to understand what is the meaning of this and what impact will it have on the banking sector. So this one, I can't really answer it now because the discussions are ongoing to see. We also have our people doing research and seeing the impact, what the kind of impact it will have on the banking sector, because the banks, they don't care. They can charge, but also you and me, they are going to put that 18% on us. So we have to understand and see. If it is a genuine case, yeah, of course, the government, we all want to pay taxes. So we all want services, but the services do not come if we don't also contribute. This one we are currently discussing, both with the NRA and the Ministry of Finance, to come to reach a conclusion on this. So with these few remarks, I think you will share the press release, and I hope you report everything as it is written. Thank you very much.